Hello dear viewers, my name is Rakesh and I am your host with the webinar Euro US dollar and GBP US dollar technical analysis today. And today is 20th July of 2021, and in this session we will be discussing about the major currency pairs other than Euro US dollar and GBP USD also. So if the time permits, then only we will be discussing those pairs. And I will just reiterate that this session will be particularly about the technical analysis only. So if you are watching this and you want to ask the questions related to fundamentals, I won't be able to answer them, but I will be definitely answering the questions regarding technical aspects, that is charts and price action. But you can keep your questions to the end of the session. I will be answering them at the end. I have already explained this that this program yesterday only I had explained that this program will be mostly have an emphasis on the psychology of a trader as to what he thinks and what he does, and that when it is reflected in the form of a chart, how we can deduce any information from the chart to open the trades that can be profitable or have very less risk as compared to when we open a trade when we have no information at all. So we'll try to follow the chart only for analysis, and in this program we will only be using the candlesticks charts. And if you are new to the video and you have not seen any technical analysis before, I request you to go through our playlists on this channel only, where we have discussed about the candlestick patterns and the chart patterns, or you can go through any online course which is free to know what is technical analysis. But in this we will be telling you in details how you can take trades from the key levels, and first how to identify those key levels in any chart or in any commodity or say currency or stock for that matter, because this is confined to Euro USD and GBP USD and other major pairs that are traded. So let us start this session with the Euro US dollar chart. Before that, I want you to know that this information whatever I say here is only for knowledge purpose and should not be used for trading. If you are using it for trading, then it is only your own sole discretion. So before we start, let's go through the risk disclaimer. This is a formality that we have to do. We have to show you the risk disclaimer. Now finally to the chart of Euro US dollar for today. Okay, so this is the chart. Yesterday, if you remember, if you don't remember, then the video is still there. You can find it. And okay, yesterday we were talking about this chart. We had created these lines, and these lines were created from the monthly levels to weekly levels to daily levels. I'm not going to draw the lines again. You can go through yesterday's video. It is still there on the channel, and the name of the video is Euro USD and GBPUSD technical analysis today. So yesterday we were talking about this particular candle here, and we were saying that if this candle closes green above this support line, this is a weekly line and it was considered very strong as opposed to daily. Weekly lines are stronger than the daily lines, and monthly are even stronger than the weekly lines. Now here it seems like a weekly line is being crossed to the downside. Now because this is a weekly line, so we need a weekly candle to close below this line to get a confirmation that this rising trend or this rising trend line has now been broken. But because for 1 week we still have Wednesday, Thursday and Friday, 3 more days left, so we still are not sure whether this is going to happen or not. But if we talk on the daily chart, yes, it is about to close a day below this, but still we have almost 5 hours and 53 minutes to go. So there is a chance that the price will rise from here and eventually close higher than this rising trend line, or it may close lower. But if it closes lower and the week also closes lower, then we will say that this rising trend line has been broken. But if this rising trend line has been broken, it does not mean that the downtrend has started. We have to think psychology. You see here, the previous low that price has made is sitting here, and we have marked it with a red line, and we have named it as an upswing pivot. Yesterday also I had explained why this is called an upswing pivot. It is an upswing pivot because the price is in an upswing, and this is a pivot. If the price closes below this, then it will make a lower low, and lower low is made in a downtrend. So the price will start making, this was high, this was lower high, and this will make a lower low. If the price makes lower highs and lower low, it starts a downtrend. So essentially, for a downtrend to begin, this upswing pivot has to break. Now to break this upswing pivot, price has to close below 1.17040 level, which is these lows here. So what information do we get from here? If we close today below this falling rising trend line here, weekly line, then this 1.1704 is exposed. That means there is a chance that the sellers will push the price even down to test this as the new support. And if this upswing pivot gives a support to the price, there is a chance the price will fall back to this rising weekly line and eventually go even higher than this, or maybe this weekly line, which was a very good support in the past, may act as a resistance and the price may fall back. So these are the two scenarios that are out there for euro dollar chart. So now if the day closes below this rising trend line, 1.1704 is the next key level. If you are already short that, then that will be the level to book your profits first thing. And if you are not short, you can look for a buying opportunity here with an up first target of this weekly line, and if it closes higher than this, then 1.1975 may be the target. But seeing the momentum to this, I'm expecting it to test and break upswing pivot, but we cannot be speculative in this. So we will only wait and see which way the market goes, and we'll trade accordingly. So this is for euro US dollar. Now if the day closes below this rising trend line, 1.1704 is the next key level, and if it closes above this line today, then the next level is 1.1975 for this pair. Let us break this down to the 4-hour also, what is happening there. So you see the price tried to take some support at this, but the sellers immediately pushed the buyers down, and as soon as the buyers tried a second time here, then also they were pushed down. So the sellers are very aggressive in this pair and expect 1.1704 very soon, maybe today or tomorrow. And if that is broken, then we have many things to discuss about that. If that is broken, then the downside targets will be huge, because it will be a break of almost a double top pattern here. I show you how it is a double top. See, this was a top, this was a top, and if this is broken, then it will go down. Okay, talking about the Great Britain pound here. Great Britain pound is also behaving the same manner. Almost this double top has already been broken here. Now expect that the price to retrace back to 1.3668 levels. Now it is currently trading at 1.3599 or 1.3600 levels. So expect the price to come back to 1.3668 to test it as a new resistance, because it was support in the previous times, and the previous support tends to act as a good resistance. So we will mark it on the 4-hour. We will mark that on the 4-hour as this. So I'm expecting now this level to act as a good resistance in the coming days, and eventually the price can go back to 1.3482 levels, because this was the previous resistance in the past, and we are expecting it to become a good support now for the price. If you see here, the price, this level, these levels were a good resistance in the past. The price went out and now it is coming back again here. So expect this to act as a good support for the price, but this is still a long way down. So the, if we are able to manage a sell position near these levels, okay, with a small, is there any position? No. Okay, there is no position. Okay, we don't have any information about that, but this is percent lines. Leave it, I don't know how to use that. So if we can get a sell here, then the stop loss will be almost around this place, and your take profit will be around this place. So it will definitely give you a very good risk to reward ratio, more than 4 or 5 I am expecting. So you should go for that, but it is not an advice. You just observe this, that whether this happens or not, and if that happens, then next time when it happens in such a way, you know what to do. So this is the second thing. Talking about the Australian dollar is also, sellers are very aggressive in this one. We were expecting the price to go down in this channel formation, but no, here the sellers are even more aggressive, and they have broken down support of the downtrending channel. This is an indication of huge aggression by the sellers. But now this has happened. Now what can happen? What else can happen? If you ask me, did you see that there was some head and shoulder type of formation here? I will just stop this all. I'll just stop all this, but I will not stop this because this is a downtrending now that has started. If you closely observe, then here this was low, and this was a high made, and then this one another low, then this was a head made, then this was second shoulder made here. Okay, now if you have seen my video about the head and shoulder pattern, once the shoulder is created and then head is created and then there is a rejection, you tend to make a line following these two. Okay, this should be straight to make you understand. So I will just remove all this, and okay, I will use polyline. So here it was acting like this. All right, and how you first reaction low, and the second reaction low is what you have to connect these two. Maybe I will just expand it. Okay, once you do this, and the extension if it is broken is called a neckline. Now after the neckline is broken, I'm sorry, everything is not ideal in the real life. So once the neckline is broken to the downside, it acts as a new resistance. And what is the target for such a pattern? It is from the height of the head to the breaking point. So if now these targets we have to measure from the point of the break, so expect these lines 0.7000 as the new targets for this pattern that we have observed in the Australian dollar. But on the 4-hour chart, does it look good? See friends, on the 4-hour chart, no, only daily also we have to mark the levels. Sorry. Okay, on the daily chart, what is the level of importance here? These are of course the levels of importance that we have marked here. This was a level of great importance here, but this level has already been broken. So this level has already been broken, so expect this level now to act as a resistance if the price goes to this level, that is 0.7402, which is still almost 70 pips to the upside. To the downside, we have the next level at 0.7168, or maybe this level here may act as some support to the price because it has acted as a support and resistance in the past. So 0.7223 may be the next level. Okay, to the downside. On the upside, 0.7402 is the next level. And of course, this neckline will also be acting as a dynamic resistance for the price when it starts going there. So when essentially head and shoulder breaks, how do we trade it? How do we trade it, my friends? We trade it like this. Okay, we don't take trade just like that at the break. What we do is we wait for this to happen. We wait for such a place where there is a test of the broken neckline, and then we open a short position. In this case, as soon as it was broken, people have opened their short positions here, but there are a lot of people who might have missed this boat. So in case you get a second opportunity here like this, then definitely go for a sell here. Definitely go for a sell here with a small stop loss here and take profit level at 0.7000 levels. So this is all about Australian dollar. Talking about the New Zealand dollar, see friends, New Zealand dollar has also broken below a very good support level of 0.6916, and now it is currently trading at 0.6901. Actually it was also a good resistance in the past, so there is a chance that this level will act as a support for the price. You see here, but the overall momentum of the US dollar to the upside is so huge. I'm expecting that New Zealand dollar will give away for US dollar and will try to decline and go to this channel support level at least, or maybe even further to 0.6575. that only time will tell. But if you want to trade in this chart, you want to go short in the New Zealand dollar, which seems somewhat like a better pair than the other pairs, not to trade but as a point of strength. This pairs look like it is stronger than the other pairs. You see, euro dollar on the daily chart has lost a lot, pound has lost a lot, but New Zealand dollar on the other hand on the daily chart has not lost a lot. It is still trading above the daily lows, whereas the pound and the euro is trading at almost lows of the day, even the Australian dollar. So New Zealand dollar seems like a good pair not to sell. So do not sell this pair, I must say. But yes, if you really want to sell, then let it close below this 0.6916 levels, and then expect when it goes back to this area here, and then starts coming back, then you can open a short positions here. Now those who want to sell this pair, they have already sold. So those who want to book their profits, they are booking their profits. Once they have booked their profits, the price will have escalated and will reach this level, and here fresh sellers may emerge and push the price down. If they do push the price down, then eventually it will go back to this channel lower support, and if that does not hold, then the next level is 0.6575 levels to watch. So keep this thing in mind. So now the key level for us is this falling channel support line and 0.6575. But on the contrary, if the price starts going up from here, then this channel resistance line will act as a resistance which is dynamic in nature, and then there is a fixed resistance of 0.7315, which is the horizontal line joining these two important highs that we have marked on the chart. All right, I hope you got the idea of New Zealand dollar. USDJPY is a chart which I do not want to trade now because it is not having any consistent flow. You see, there are so many crescent troughs, and this falling long-term line on the monthly and the weekly has actually been broken to the upside. You see, this has been broken to the upside convincingly, and the price has also taken support. But after that, even this last month there was an up move. This month was not able to cope up with this, and so I'm not very convinced with buying the USDJPY. But in case it goes above 112.18 and closes a week convincingly above that, then I think we should be going for a buy in this pair. But as of now, if you say I want to buy, no, I do not want to buy this pair. And if you say I want to sell this pair, no, I do not want to sell this pair, because on monthly chart it is in a buy mode. But yes, if it closes convincingly above 112.18, and then it gives me a buying opportunity, something like this. If something like this happens, you see, then I will be definitely looking for a buying opportunity here. Okay, this is on the weekly. And on the daily, I am saying is that, see, US dollar is because across the board US dollar is performing good. So this is a small rise. It is still an inside bar from yesterday's red candle. And if we draw a channel joining these, then we need at least this channel to break to the upside to buy this pair. So I will say just stay away from this pair. This is very fast moving, but I don't know for what reason. There is no volumes in this pair and no volatility, so just stay away. There's no much room for profits. Whereas US dollar against the Canadian dollar is performing good. The fundamental reasons we cannot talk, but whatever is visible on the chart, it is showing that the US dollar is gaining much value as compared to the Canadian dollar, and has risen almost in 1 week. It has risen from 1.20 to 1.30 almost levels. So this chart is trying to move in a range from 1.46 to 1.20. You see how easily we can identify this. But this fall was so brisk because the Canadian dollar or the oil prices rose to a significant level from $30 per barrel to almost 70 per barrel. So now this is all because of that. Now why is this? Because the US dollar is gaining value. We don't need to think about the fundamental reason. What we need to think is that this area was the previous support for the price. Here, see, once, twice and 3 times, and even 4 times, then eventually break. It acted as a resistance. Now the price is again going back to this region. Now if it is going back to this region, this may be another opportunity for us to open a trade. Okay, but you see, what are the broader views? Broader views is that the US dollar is strong. Now if the US dollar is doing strong, there is a chance that it will break through this resistance. It may just shoot up like this, and if it does, that means it is able to trade above a resistance level. So we will wait for it to retest that resistance as a fresh support, and maybe we would like to open a buy position, because we know that the price is trading in a range, in this range, and the next ceiling of the range is 1.46. so if we buy here and target 1.4689 levels, then it will be a very good as a trade when we talk about the risk to reward ratio, because we will be keeping a stop loss below this low, whatever is made here, and our take profit level will be here. So it will obviously be a long-term trade. Let us see what is happening on the daily chart though. On the daily chart, as the price is approaching this resistance zone, which is still 200 pips away, you can see some sell-off coming. It may be because of this previous resistance or because of these two previous resistances. But since I am saying that the US dollar is strong, there is a chance that after small pullback to maybe this area 1.2646, you may see another rise or another push to the resistance here, and from here we may expect a fall or maybe a breakout. But we will not be speculating. We will see what happens in the market and we will do accordingly. I hope you understand my point. And let us see what is happening on the 4 hour in this one, because I see some yes, on the 4 hour there's a bearish engulfing, and the price on the 4 hour is rising in a channel. So what we're gonna do is, there is a chance, there's a very high probability that the price will fall to this support or maybe this channel support and then again rise. So my request is that you just don't buy it here at these levels. Don't buy it, wait for the price to pull back and let the profit bookers to go out of the market and then go and buy this market, but that also for a very small target, only up to 1.2914. But if you want to trade this market for the long term, then let 1.3015 to be broken and the price to come back to this area 1.3015 for a retest, and then we can expect the price to go back to 1.4689 levels in the coming days. All right, that is about the USDCAD. USDCHF, yesterday we had talked that it is trying to make a symmetrical triangle. Yes, it is in force, and the current movement of the price is showing that this symmetrical triangle may break anytime soon, and the price may be headed back to the falling channel resistance line. Now once the price goes back to the falling channel resistance line, only two things can happen: either it can break it, and go like this, or it can fall back from here like this. Okay, this is what can happen. These are the two scenarios that can happen. So what we are gonna do is that if the price breaks on the upside, then we will wait for this region to buy, and if the price shows us a bearish pin bar here, then we open a sell position with a small stop loss above this high made here, and we will target these regions 1, 2 and 3 as targets. I hope you got the idea about what we are going to do. These are the plans. We will not open positions unnecessary. We will just wait patiently, play video games, talk to our family and do whatever you want to do, but we will not open positions without a reason. All right, and I'm here to help you out in making informed decisions. If you have any questions, you can write in the chat box and I will be very happy to answer those. If you are long or short in any particular pair and you want to have information from me, of course I will not be advising you to do anything, but I will just analyze them for you so that you can have an informed decision. You can write that in the chat box right now. I'll be very happy to analyze that pair for you. And if you are watching this video after it has been telecasted live, then you can write your questions or comments in the comments box that is below the video. I will be replying to them also. So I'll be waiting for 1 more minute to for any question to appear in the chat. After that I will close this webinar. I expected some questions from you today, but if there are no questions, there is no problem. So I will just end this webinar. I hope you got now some idea about the support and the resistance levels that are of interest in the coming hours and days. And just keep in mind to never risk more than 1% of your capital on a single trade, and look for a potential profit of more than 3 times or 2 times at least. I hope you understand this point. This is called risk management, that if you lose, you should not lose more than 1% of your capital, that is for sure. And if you are gaining, you should gain at least 3% of whatever you are risking. With this note, I shall end this webinar. Please press the like button if you find this video useful for you. Leave your suggestions in the comment section. If you want to give us any suggestions like what we can incorporate in the next videos to come, and consider subscribing to the channel for more such videos. Also, you can join the Dukas Copy Forex community, where there are so many things for the forex traders. The link is there in the description. I wish you a happy and a profitable day. Thanks for watching.